Hello, Warriors. How's everyone doing?
Good early morning, Dale.
Good morning, Kman. Another surprise that we had here in
Surprises.
yen.
Surprises
Upside.
are gifts that keep on giving.
Yeah, hold on. Here's this one I want to show. The only thing I did right was so far, this pullback in EG.
Yeah.
But the move in the yen, what sparked it to really explode? Anything?
Yeah, it's a succession of Fed speakers last night calling for
1%, the 1% talk.
Well, the 1% or at least later on the other speaker saying that they wanted at least the same hike as we've seen this month, and then there was a bit of a COVID scare again in Japan, and yeah, and them virtually remaining silent, apart from yet another couple of commentators on the speed and on the yen weakness, but it didn't prevent the market from trying to test them. We just stopped on a bit of an extension there in the 139.40 zone. But the market is in test mode, right? In my opinion, to where they can take this yen, and but we saw some decent correction, whether it be technical or when PM Kishida said that he's calling to reopen 9 nuclear reactors, which should alleviate some of the pain that they're experiencing with the high energy pricing. This being said, since the big quake and the Fukushima disaster, the regulations to get nuclear reactors restarting are very, very strict in Japan. So it's going to take a while before those materialize, in my opinion.
Speaking of energy prices, right there on major support, also with the 200-day right there.
Right.
Looks like it wants to crack it. I think Biden goes to Saudi today, so
yeah,
we'll see if he shakes hands with you know who. Yeah, that's a big deal. Is he going to shake hands with him? Metal's getting slaughtered.
Yeah.
Is Ryan around?
Yeah, hi mate. Have you seen Biden's latest comment?
Biden's latest comment?
Yeah, he just commented that he's using the trip to reassert the US's influence in the Middle East. I don't think that's going to go down well.
Yeah. Well,
so
is he bringing peace to the Middle East again?
Yeah. Good luck.
The only thing he has in common with the Saudis is being adversarial with Iran. Okay.
Yeah, that's bubbling up again. He's had comments about that.
Yeah, that it's happening in every Middle East country right now. The Sunni, Shiite fighting each other, killing each other, and that's the enemy of my enemy is my friend. So that's their common ground, as far as I could see. I wouldn't be surprised if the Crown Prince says, okay, we'll pump more oil, even though we're almost at capacity. But you know what? I think we're going to price our oil in other things besides the dollar. I know they sell it in other things besides the dollar, but I remember talking to Vic Sperando a long time ago, and because of these relations, Saudi's also close with China, and maybe for them to do something, we might give up some dollar hegemony without starting a war in that country.
Well, you know what's happening, don't you? And Kay pointed out early in the week that the Russia's backdooring oil, okay, and people like the Saudis are going to be taking it and repackaging it up, if you like, and selling it to the US.
Well, okay. Yeah, so just
how'd you work that one out? So they'll find some barrels, and they probably come from Russia.
Yeah, how about that? So we don't know what's going on, do we? So,
but the thing is, Ryan, I don't think that anybody cares about it.
Where it comes from?
Yeah, I bet you that even if they told Biden, listen, we can't pump more oil, right? We don't have any more capacity, but we can send you some Russian oil and we'll pretend it's ours. I bet he's going to say absolutely fine. And I'm not. This is not a targeted comment to Biden. I think any U.S. president would have done the same thing. You know what I mean? It will be as long as it's not obvious it comes from Russia, and people are not going to accuse me of actually, breaking the, in essence, blockade or whatever. No, it's not a blockade in this case. It's all the restrictions put in place, etc. No problem. Send me whatever oil you want.
It just makes a mockery of it all, doesn't it?
Yes, of course. But this is how politics works, especially nowadays, right? It's all about pretense and what you show on camera. It's not about substance.
Metal's getting hammered. Silver's at the 61.8 level. Gold looks, it hasn't made a new low yet, but looks heavy. Here we are again, all one market, right? Strong dollar, weak everything else, and it's the same song, same as it ever was talking heads. It's all one market. The only difference is magnitude in the decline. So do you see any differentiation anywhere?
No.
Why would wheat trade like the dollar, or why would wheat trade like the S&Ps? Or I have no idea, that except that everything is so financialized, there's no differentiation. You either have to be long the world or short the world.
Yeah, and you can't have.
Have you ever seen that before?
Yeah.
You have?
Yeah.
Okay.
Yeah, you get phases like that, where the dollar is king, as they say, and as you mentioned, the market's been going one way for weeks now, and we're starting to get some decent breaks. I mean, you just had dollar CAD up there.
Yeah, finally took care of all that business. All those stops are gone now.
I had a short into 30.80 during the flow show, but a quick reverse at 90 into a long. I was worried about 131 offering resistance, so I was a bit worried about a buy stop, the margin between 90 and 00, but it went through 131, so I'm sitting long, and the next stop is
33
131.70.80, which is the top of a channel.
Okay, I saw 133 possible target from someone who said if it got through 31.33 was a possibility. So
it's a 50 fibber that moved down from I can't remember where now.
Yeah, a long time ago. You got to go back from here.
Yeah,
is that this one? And then 133.
Yeah, March 2020, the high of March 2020.
So I mean that does show how strong Canada is. Also like we showed Aussie, the weekly compared to euro and cable. That these are in retracements while the other ones have taken out their COVID lows or peaks depending upon the way it's paired. Looking at the pound, I believe we're almost there at that wedge line, so not that far away, maybe 80 pips or so. So I don't know how you guys feel, but I feel late to short any of these things that are down. You're a trader, you're closer term to it, but I'd have a hard time holding my nose and buying Canada here and selling Aussie here and selling euro here or selling silver here. But keeps working.
Yeah, you've got to let the levels do the talking, haven't you? This parity level in euro dollar, it's becoming a real thing. There's real interest not to go below that line. And
it looks like we're gonna take out the lows, challenge the lows in risk in S&Ps.
Well,
doesn't it look that way?
The bank earnings so far have been a bit on the downside.
Yeah, the big news is JP Morgan canceled their buybacks.
Yeah, so Morgan Stanley as well.
They don't even want to buy their stock.
Can't give it away like Bitcoin.
Well, if Jamie doesn't want to buy,
it's becoming more expensive. to buy back their stock, right? Because they
Why?
can't
Because
borrow
of
where they
rate?
used to. Yeah, they can't
Yeah.
borrow where they borrowed a year ago.
Yeah, they're still talking about the corporate bond market, which is where, you know, when you think about it, and you know, I talked about this before the top, that exactly what you're talking about, Stel, is that corporations, instead of investing in employees, plant and equipment, they invested in financial engineering, and they were buying their stock back. So they bought their stock back at higher levels, right? Much higher levels, a lot of buybacks above where we're at with things down 20, 30%. And they did it borrowing, which almost makes it like a margin account. So now they have a margin account where the asset is declining and their cost of financing their margin loan is going up.
If you remember, Dale, we've had extensive conversations about that many months ago, right?
Many moons, Steve.
I want to point out one thing. That is absolutely correct. The only issue is that the executives, the CEOs, they get paid at the end of the year. They get their nice little packages based on where stock price is. Do they have clawbacks? Like I remember when I got paid my bonuses at Merrill Lynch, there was a 3-year clawback. So if you lose money, if something happens 3 years down the line, you have to give some back. Do they have that? Of course they don't. That's the problem. They have no incentive to be prudent.
Yes,
right.
Because on the other hand, Stelio, the moral hazard begins from central planning. Because unfortunately, you know, this is not capitalism, right? And a lot of people try to blame capitalism for that, but that's the exact opposite of capitalism. Why do they do all that? Do you remember what happened during COVID with all the airline companies that had spent like 90+% of their free cash flow during the past 10 years to buy back the stocks? They got bailed out immediately. Capitalism is not trying to find a solution for company buybacks.
You let them go down.
Capitalism is let them buy as much of the stock as they want, because your job is not to regulate that. But if they fail, because when things go wrong, they have no money on the side because they wanted to do buybacks, you let them fail. You don't bail them out.
Like the airlines in the last COVID
exactly.
surge. I mean, we bailed out the airlines, and now they're, you know, and everyone retired with that money. They gave them early retirement, and now the cancellation of flights is unbelievable. It's a mess.
Exactly, but as I said, this is not capitalism, right? This is the opposite of capitalism. If they want to be buying back their stocks and then they have no money for a rainy day, you just tell them, "I'm very, very sorry, but you know, you need to sell your company as a distressed asset, and it's okay. Somebody else will be out there that's willing to buy it, resume its operations, right? And perhaps they'll learn from your mistakes and not do them in the future."
Yeah. Anyway, so we're on this warp's path. Any ideas? Anything coming out of China? Because you know, this looks like this wants a new high too. The yuan. I mean, all it's done since this huge move, I know no one's talking about it lately, has just moved sideways. And
we've been talking about it, mate.
Yeah.
I'm looking for 77.50 for a cut of my longs that I've been sitting in for a couple of months. 678.
You caught the bottom.
Pretty much.
77.50 above these highs.
Sorry, no, 677.50. So.
Okay. All right, so you're almost there.
Nearly there.
Okay.
I've got
nice trade. Nice trade. I know Kman was there with you too.
I was, but my horse got stuck in its box at the departure line for this.
At the gate? Oh my gosh.
Yeah. We put it in backwards.
All right, crypto along with risk. You know, looks like new lows coming. I mean, this is another confirmed low. They just keep confirming every new low. There's no divergence. You would think if S&Ps are going to make new lows, they flush this too, what, 17 grand or something like that, 18 grand. It's hard to come up with a number there, I know.
Yeah,
comment on crypto?
Cryptos, it's those lows at 17.6. What is it? I mean,
Yeah.
that's really the level. After that, we're going to 12.
Crypto is probably at the precipice of another breakdown, if you ask me. It looks very, very, very weak.
Yeah, it's like this. It's almost identical pattern, right?
Yep.
So you take a hit and you've been in a car wreck and now you're in shock and you just stabilize.
The thing is that, as you see, nobody's really willing to buy, right? I mean, there is no real, successful attempt to really push the price higher. It's just down, then consolidating a little bit over time, then down again, then consolidating a little bit over time, rinse and repeat.
And we just call that bearish price action. That's all it is.
Yeah.
So,
And could it be because people, Blake, could it be because, people don't know where it is safe to buy it unless you put it right in a wallet because of what happened with all the exchanges? They can't get their money back.
I mean, I think that's there's a multitude of issues, but I was listening to this one analyst. I believe it was on some macro show, and he was talking about it's still just there's a lot of overinvestment basically in crypto, and that's all got to come out of the market. And it's it's Michael Saylors of the world, but in institutional, money needs to really start to come out. And remember, this is Wall Street game, this crypto madness now. It's not, and that may be, honestly, the death of crypto, because you're not going to attract a lot of new hype money into crypto at this point, from mom and pops, because they've lost their money. Unless there's some new innovation, you're not going to get that money coming in. So now you got to get institutional money out and continue to get out, and all the massive investment that we've had in crypto, from firms to jobs to that all still has to come out of the market. So I think crypto still has further to go.
There is a word in Austrian economics for exactly what you described, Blake.
Yeah.
You called it overinvestment. The Austrian economics word for it is malinvestment. Exactly.
Yeah. I'm as smart as Steve.
Yeah, very good, Dale. I like that. Hey, real quick, let's talk about the euro down here at parity. When I got up this morning, when I saw the dollar doing what it's doing, I was like, man, what the hell happened to the dollar? I guess there's been a lot of repricing for rate hikes for 100%, or a full basis, full percentage point, 100 basis points, 100. Oh my gosh, I can't even speak. It's 5:00 in the morning here. A full percentage point, 100 basis points of a hike from the Fed in about a week and a half. What do you guys think about that? Is this like a repricing that everybody's doing now, and what's the percentage right now that you've seen? Those of you that have been up all day.
The last time I checked, it was about 75%.
For a 1% hike.
Yes, and I've said it before. The Fed doesn't like to disappoint market expectations. So, in my opinion, if market expectations remain that elevated, they will deliver 100 basis points.
Guys, July-August Fed Fund future spread is at 80 basis points, and the meeting date is the 27th, right? If I'm not mistaken. So that makes it pretty much 75 priced in. So we're not pricing 100.
Okay. Earlier, yesterday night when I checked, at some point it was much higher, the expectations for a 100 basis points.
Running about 75% on OIS, on the swaps, Fed swaps, and 80% on the CME Fed watch thing.
Okay, fair enough.
There you go. Maybe that's the catalyst why the dollar is continuing to rock higher. I mean, the euro's closing in on parity. You have the dollar Canadian that has broken out. I know you guys spoke about this a little bit, but it continues to break out. This one actually stopped me out. I was looking to I shorted it yesterday. I was going to add to it below this fib level. And I guess that the market's got to be looking at the Bank of Canada saying, yeah, that was great one-off, but the Fed's going to keep going. I mean, that's the only thing I can imagine now. But because crude oil isn't breaking down, I mean, crude oil is actually holding above the 200-day moving average still. But this dollar Canadian looks like we're heading towards channel resistance, which would be way up here. And this is a very loose channel. It'd be way up here around 132, 133. I know you guys spoke about it already, but this dollar Canadian is in breakout territory while we're above this 130.80, right?
Yeah, 131
anymore.
My channel.
Okay, and Ryan, you picked this one up on the long side, so really nice trade, especially doing it in the flow show. If you guys are European traders or you're up just throughout the course of the night, make sure you're catching Ryan and Kman and Stelios on the flow show, which is live analysis. How many hours ago was that? 4-ish?
Yeah, 3.
3 hours ago.
2.5, 3 hours, yeah.
Awesome. So if you guys are up typically around those times and you're awake and you're in front of the computer, make sure you're joining those guys talking about the markets. We have 161% extension of this consolidation, which I'm assuming is going to get hit, which is 137 or 131.75-ish. When you do a tight consolidation, that's almost a range expansion. It isn't completely, because you could say double bottom and the top would actually be somewhere up here, which would take us to 133. That's entirely possible, but I would assume that we stop around the 161% extension, which is still a little bit further away. Yes, Steve.
We made an extensive, we covered extensively yesterday in the morning edge the USDCAD with various technical formations, etc. So people were actually, extensively informed about the potential upside targets. What we were looking for is, if you look at the USDCAD exactly at the view you're having at the moment, you can also see there is a cup and handle formation that we just broke through. So
Dave Hooper says he's up 200 on your cup and handle ideas, Steve. Nice work.
Thank you.
There you go. That's awesome.
So there is the potential for a move, quite higher from where we are. If I remember right, the cup and handle formation target is roughly another couple of 100 pips above where we currently trade. So I think
33.
there is more. 133.50 or so. Yeah. So I think there is more potential for gains here.
Awesome. Great call, Steve. So I want to ask you guys, I want to point something out regarding the yen. I know, Kman, you cover the yen quite extensively. And the yen, is it following yields? What's the move here? But the one thing I do want to point out is if you go over to a weekly chart and you look at the 1997 highs.
145.
Yeah, it comes in right around 140. I think it was 148, but
something 147.
Yeah, 147 and change. It to the 2011 or 2011 lows. We're at the 88% Fibonacci, retracement. Now that's the 88%. I always consider the last straw or the last line of defense for anybody who's trying to play a range. We get above that, then there becomes a strong possibility we make a run for those highs and then even further towards 170. So it's going to be really interesting with everything so grossly overbought here. If we can really expand on a move above 140, that's I'm looking at 140, not so much 139, because if you're looking at a weekly chart, you can't just say it's at the pip. You got to kind of give it a little bit of wiggle room. But it's going to be really interesting to watch this dollar yen up here. Now, Kman, I know you were just about ready to say something. So what are your thoughts?
So the thing is as well, this 139.42 is, I think, the 127 extension of the Abe move from 2011 up to 2015. So that's an interesting level to keep an eye on. No, I was just going to say we've been talking in length about the yen today on the flow show, including some possible intervention scenarios, seeing the levels that we are at and the speed that we're going at. I was long Canada yen from the Bank of Canada yesterday, and I closed them out today pretty luckily, about 120 points higher than where we are now. But just because of the speed of this move, this week alone, we've done over 300 pips in dollar yen. And in my opinion, the officials are not really going to like it. So we talked about, not saying that they will happen, but we talked about possibilities of interventions and how they may look or extensively on the flow show if people care to give it a listen.
Yeah, and I was going to say, I mean, we haven't really been concerned for Bank of Japan intervention, or so. What makes you think that now is the time where the BOJ is going to, it's caught their attention, or the Ministry of Finance is going to start paying closer attention? Because we've accelerated moves higher, months ago. I mean, but this move above the 120 level. There's a lot of people that were fading these 120s, and they watched 1,000 pips go up in their face. So what's going to stop them now, or what's going to change things now?
Well, I don't know for how long people have been listening, but I've been saying all the time, I don't expect any intervention before we at least hit 140. The last intervention to sell dollars, if I recall correctly, my dinosaur brain is that. Is Mr. Yen Sakakibara back in the 90s. He was trying to keep dollar yen inside kind of a range like 120 to 145, and then we went above, and I think they kind of intervened there. Unfortunate timing, because we just ran into the LTCM blow up a couple of months later, and dollar yen naturally collapsed another 30 big figures. So I think it's two things. It's possibly the level. I was saying like somewhere around 140, 145, they may get nervous because 150 may be their red line, but it's the combination of the speed as well. And dollar yen, well, it's been followed now by the other dollars, but dollar yen went on its own again, and that's a bit what they don't like, in my opinion, just to go on its own. I don't think the move from 110 to 125 scared them at all, because that was in the plans actually for the yen still to weaken, in Kuroda's plans at least, and hoping that it would curb the negative trade balance and all those kind of things. But now they've created their own downfall in some way, and now the market is really in testing mode. I think it's in testing mode. I think it's also important to note when those moves happen. If it happens naturally in Japan, they might comment on a lot of stuff. But if you then have massive continuation in outside of the Tokyo hours, that's where they could get a bit nervous. So I'm not saying they will intervene tomorrow, but it might be the case in the next weeks or something.
Got it. All right. Well, thanks for the update, Kman. So I want to ask the rest of you guys, how shocked are you that the euro dollar is not below parity? I know, Ryan, you mentioned that that the euro trading down here, parity is becoming quite a thing. I mean, you look at this is a 4-hour chart. You can see it clearly. This week we've tested parity twice. This is the third time. I mean, how big is the breakdown going to be? I picked up some euro yesterday. I got my stop at like 0.9990. So I'm assuming if we break through that, it's going to fly right through my stop. But what do you guys think here? I mean, are you shocked that it has not broken down?
Yeah, it's huge, isn't it? Really, it's a Dale. It's a big level. It's always been a big level. It's been a big level for years, and here we have typical price action. There is something or someone who doesn't want it below parity. We knocked out the possible barriers yesterday with a low print 99.98, and that's talking on the institutional side, not retail platforms. So unless there's other options in play here that we don't know about, the barriers should be gone. But there is strong interest here, and here we are. We've been sitting down here now for the last 30 minutes, half an hour,
right?
Tapping it. I've been scalping.
Sorry to interrupt. I was going to say, the question is somebody defending it, or is somebody accumulating like there's no tomorrow?
Well, it could be accumulating it and then letting it slip below, accumulate some more, and then bring it back up again. But I think it's interesting because we had such a when we talked about the CPI yesterday, we have PPI in like less than 10 seconds here. When the data came out strong, the dollar rallied, but then it faded throughout the course of the day. So let's see if we get that here. PPI coming out right now, and it is hotter than expected on the month-over-month read.
Core isn't, hold on.
Core came in a little worse than expected, but the revision was higher. No real reaction yet, but we're seeing, I mean, the dollar's firmer, I guess. You know, you're seeing it against the yen a little bit. Dollar yen, continuing back up above 139. But I'm surprised that hasn't pushed the euro back below parity yet. I mean, it's like somebody's holding it. Something's happening.
ECB.
Yeah, the ECB. They don't even know what intervention is. They might be intervening down at 70 cents. What do you guys think?
Well, no, the funny thing is we were talking about this parity and stuff yesterday, and we had like ECB members. There's only 2 or 3 of them like mentioning the euro, but as a coincidence, they are mentioning it here around parity, as same coincidence that we had when they were mentioning it above 119, and we had one more rally to 120, and it dropped from there. Is it something? Is there something? I don't know. I'm trying to figure a fish somewhere to find an answer to see who's on the beat. But
yeah. Well, you can see, people try to sell into that that level, because you look at it and you're like, man, that is going to break down. So how many people are like just shorting into it, and then PPI number comes out, it should break down, doesn't, so they get squeezed right here. It's a big defense right now, so you've got to watch it in case we break, and I think that's if you're a currency trader, that's what you got to be watching today. Steve?
I think, Blake, it's a matter of when, not if.
Right. Yeah, I would agree with that. If we cannot get back above like the 102 level, which is way up here, if we can't get above that soon, then you're right. It's a matter of if, not when. So hey, I want to mention, everybody, if you haven't checked out the Trader Funding Program, make sure you do so. If you want to learn how to trade our money, and take 75% of the profits and none of the risk. Learn more about it. Just watch the video down at the very bottom here. I know you have a guest coming up. Dale, is he here?
Patrick is here.
Oh, great. All right. Well, I want to say thank you all very much for your support.
Someone help me promote him for the 1000th time.
I think Steve will have to do that.
You can promote him, Dale, but he also needs to accept, so it doesn't happen automatically.
Oh, because I've done it, I do it 5-6 times.
Yeah, I did it 5-6 times yesterday as well, but until your guest actually, clicked.
Oh, that's it. Okay.
Yeah.
Okay. Patrick, welcome back. Thank you, team.
Thanks, guys.
And Rio Keo, nice call on Euro on the pop on the news. I want you join the community and help traders out with your skills. Okay, get into the chat room with everyone. So Patrick, great to have you. How are you, bro?
Hi, Dale. Yeah, what a day to catch up, right? Like everything's melting.
Yeah, all one market. Everything melts. Everything goes up together, down together, just a matter of degrees. And look, I didn't think the dollar would get here. And I also thought that we had put in a significant low in the silver at 2040, and did okay on the way up, but disappointed with the action. Are you going to share the screen?
Yeah.
I think we're going to talk about some currency charts or anything you have to show. Patrick, you could follow him at Bad Charts 1. He's with Kevin, and they're a dynamic team and some pretty creative things. So we're going to start off with Canada here.
Yeah. Well, okay.
Oh, the US stuff. Yeah, that's Canada. Okay.
Yeah. So what we got to look at is, honestly, what I'm looking for is these monthly chart guys, and wait for the wick. I want to see this This was a US dollar. You see these, I call these the twin towers. So these were meaningful tops, but you could only see these type of capitulation wicks while this is on, like on the upside. So exhaustion melt up. You could only see them after a certain amount of days have passed by, right? So once you get
Rearview
this,
mirror. Yeah.
This, I call these the twin towers. And for me, this was super, super, super meaningful. And even here for the, like, it depends. Right here, you could even call that a back test. So the way I see these trend line breaks is the first one, let's say you're going in an uptrend. Well, I'll get to what's happening today. So let's say you go in an uptrend, then it goes and melts up. You think, it's going to the moon. But eventually there's a steep angle, which is called the sleep mode line. When after you get like, this is my sleep mode line, here's the capitulation wick. Once you close below that, sure, it could go back up, and it often does, right? It's what I call like the echo bubble. But if it can't regain the previous highs, that means the momentum is starting to slow down. And I think some of you guys might call this like Gann fans or Fibonacci fans. You know, it's the same type of concept. I just draw them by hand. But here's another one. So you see it broke down convincingly. The price goes up, but it's just backtesting, can't regain those previous highs. And what it does, eventually over time, it just melts. And even when it rises, this is still weakness. So it's rising up, but you're in a less and less steep angle of ascent, right? You don't have the same drive you had when you went crazy up. And here's the final capitulation wick. I just noticed this line, perfect touch, and then down it goes. But look, that's why you got to stay positive on the CAD versus the US dollar, because it's not doing new highs. It's
every other currency has. That's the point I was going to make, is that most other currencies, Patrick, if they were priced US dollar, like the yen and everything, has taken out those highs. COVID, that was a COVID high there at your second tower. And as strong as the dollar's been, Canada's not up there.
No. And
you know what I mean?
Yeah. And this chart is exactly the gold to silver ratio. So if I add the XAU USD, and everything's financialized, guys. So you gotta, it's like, I'm starting to categorize like types of charts. There's not that many long-term patterns that look different, honestly. If you zoom out,
it's all one market.
Yeah.
I've never seen this before.
And this is the, okay.
Well, maybe I have, and I forgot.
Whoops. Move that to move to pane below.
Okay.
And this is kind of eerie also. This is a type of pattern. You can see the momentum. So right here, I have the distance from the 3-year moving average for the USD versus CAD pair.
Yeah.
And its momentum is tracked by the gold silver ratio. So you see it right here. This is the gold silver ratio overlaid with the momentum of the, and then you can see that when the momentum of the CAD, you see it's still going down here. So I'm wondering what's going to happen right here. Here maybe is another.
95 in the gold silver ratio, maybe 100.
Okay, here it is. So I'm going to put them back together. And this is essentially the USD CAD pair or the gold silver ratio. So silver, for the gold silver ratio to go up, look, the gold silver ratio is highly inversely or negatively correlated to silver price. So it's silver price driving mostly the gold silver ratio. So when the market thinks there's a risk off, something severe is going to happen, here's a GFC crisis, the gold silver ratio gets sold off, the CAD gets sold off, and they track pretty much each one. So what I'm looking at is I want to see a monthly wick, until there's a monthly wick. And you know what could happen? Like even above this line here, it could go really crazy up here. And then we're going to hit a wick. The seller is going to come in and say, look, this is exaggerated. They're going to start pricing in the rate hike cuts. And then after that, oh, look here, there's some type of pivot line right here. Support, turn resistance, support, breakdown, resistance, above, support, up, support, below. So this is important resistance right here. So really, we got to wait until the end of the month. Let that wick come in. If we have a crazy wick up here, Dale, and it closes back below 1.30, that's an opportunity to probably go short or go long the Canadian dollar. And especially if we get, I'm going to put a candle, look, the candle charts, I like line charts to remove the noise, but candle charts, those wicks, they really give you clues on, and even here, look, it's super scary. This, whenever this starts crescendoing up, we're vulnerable for these huge, crazy spike up where you think it's the end of the world, right? And we're vulnerable to that. And guys, if you want to know, if you're on the sidelines and you're just, this is my go timeline until this line right here is closed below. Stay clear. Stay clear. There's absolutely no reason to, you see this unwind here of the gold silver ratio?
Yeah.
That was a clue to start going, okay, the market decided that there's no market liquidity event. Gold silver ratio goes down. The VIX goes down. I could overlay the VIX. The US dollar gets sold off, right? See the US dollar goes down. It fuels everything. But out of the gates, it will fuel silver and gold way more than US equities. But over time, after the initial move up in gold silver, then when, let's say they realize that the economy is going to do fine and all that, then after that, that's when the US equities take over and it's in their favor. But look at this.
So, you know, and it's unconventional because a lot of people thought gold and silver would do well during risk off in equities, would be a flight to safety, you know, that the dollar would come under pressure. And it really has been, you know, just, and bonds went down, everything went down. So you talked about, I want to explain to our audience what you mean by every market's been financialized.
Well, all these charts, look, I'll do it live. It's all these charts, they track the SPX, let's say the SPX to gold ratio. I'm going to zoom out, reset chart.
Yeah.
Remove indicators. Just pop that up, remove drawings.
How many hours a day do you spend on your charts, Patrick? I'm just curious. Yeah, ballpark, you know, approximately.
I don't know, 8, 10, 12. I think I dream my
20.
subconscious because it's hard to calculate. Like I'm not always in front of the screen, like spend time with the kids and all that, of course, but it's like my brain is wired to like,
yeah,
you start seeing
art.
These patterns.
It's art to you, isn't it? Art.
It's art.
More than science.
Well, it's psychology. So I don't know where you would put this, but this is a study in human psychology. And if you understand that, you're ahead of the look at that. This is the gold behind is the SPX. I'll put on the log chart because that thing has moved. And I'll put silver on the log chart. Look at that. Behind is the gold divided by SPX. So essentially when you see a ratio chart is which one is outperforming the other, right? And you could also see it as capital flows. If one's outperforming the other, that means the capital flows, which are, let's say it's the money supply, that means they're going more in gold or at a higher rate in gold than SPX on the way up and on the way down. And that's all silver needs. It's the gateway. So until gold breaks out versus the SPX, something like this here.
I think I saw your video where you showed it would be in a pullback mode where stocks would outperform silver for a while. And you thought one more pullback and then that could be it. Did I interpret that video correctly?
No, that's correct. So right now I had it, I think it was on the 4-hour chart. So right now, I think this is going to go down a little bit.
Yeah.
And then after that, once we get like a 2018, because I'll zoom in. But that's why, guys, silver, don't even worry about it. Just don't even look at the silver chart if you don't want to, because gold's going to break out first and it's going to start breaking out versus. So right here, look, this is 2018. Okay, I'll show you something special, guys. We all know that gold broke out in June of 2019. So right here, I'm zooming in. Look where it was versus SPX. It was on the way up. And that's when it broke, had a monthly close above 1350, above 1400, and it broke out of that base.
Yeah.
It was right here. It hadn't even broken out. So just that move of gold catching up to the SPX performance wise. It created that huge move. And then after that, it went down, went all the way back up here. And that's what created that move to over 2000. So what's possible right now is I always look for fractals, and this is a great tool. I could even take that. Doesn't mean it's going to happen this way. Oh, why is it doing that? Is it because I'm the log chart? Oh boy.
People are saying you're a mad scientist here in the room, Patrick. I'm kidding you.
Well,
They're going, wow, this guy's way over my head. Look, Patrick and Kevin live and breathe this stuff. All right.
Yeah.
Even their tablecloths are charts. All right. They spread it out with ratio charts and eat steak on top of it. So
something like that. And so it's gonna, because we always expect when it goes up, your emotions go up and you think, oh, this is it. And even I fall in that category. We're humans, right? You think that's the time, but the market's always going to do one more bounce. It's going to do one more thing that's going to wear you out. And you went all in early, and that's just the way it works.
You know, Patrick, what two things that traders should never do? And, you know, most people will say, oh, well, don't trade without a stop or don't use too much leverage. I say they should never do cartwheels and never go fetal. How about that? Or you're not a trader, and if you're getting elated on winning trades, you're going to go fetal on losers. It's just another trade. Just kidding. I just chewed off on my fingernails. But anyway, that's what they should not do.
And it could go down here.
Yeah, that's what you were showing.
Yeah. And this, if this happens, guys, I'll show you the gold chart. And I know maybe here's the gold chart. And this, I know a lot of people are looking at this as being a 2013 top. Guys, the evidence, this topping pattern does look like it, but just like the gold to SPX ratio here, guys, was way higher than it is here. We're rock bottom right now. But what I think more is happening is this. This was in 2018. Let me draw it here.
Oh yeah, you have a video out now to debunk the 900 target, which makes the last couple years. I bet you're surprised. I see your stuff, but you shouldn't be. That the last high we had at 2070 was a B wave, and we could have a C wave down to 900.
Well, I understand these wave counts, but it's like it's not taking care. That means it's disregarding an 8-year base, a 7-year base. How could you discard that? There's a reason gold broke out in June of 2019 out of this massive base. This is a massive wall right here. So it's kind of tough to think that you're just going to go through that through butter. And I went through a whole bunch of examples over time. I haven't found an example where you're, especially when you're in a depreciating fiat.
Do you have anything at 1600 to 1560? Because that's kind of middle of the road of the extreme bears, and nothing there.
Yeah.
Nothing at 1500 all the way back to 1350. You think that's possible?
Well, here's a wall. So previous support, turn resistance. So this is a critical wall also here, right? So here's a 1560. It is there. And there is a reverse symmetry move from here to here. So I got to be fair. When you break my sleep mode line, just like this one here, you have a vacuum right here, especially if we close below 1700, then you have a huge vacuum. Well, you have a vacuum like $200 down here. No problem. That's probably going to happen. So if this happens, we're in a GFC type of event here, but you got to expect maybe a wick here, Dale, below here, a crazy wick. People think it's the end of the world, but then the buyers come in, they close up here above 1560. And that's probably going to be the last greatest chance ever to getting gold. Like, because look at March Madness, Dale, look at that. When the markets were at their worst, when it was the end of the world, if you would have taken a step back, it closed practically at the entry. So it's going to, and this is the way I phrase it. The most bullish looking candles, or bearish, like these wicks, they at one time during the month, intra-month, they were crazy Marubozu candles that were filled up to the brink, right? And before the end of the month, they got sold into.
Yeah.
Same thing on the way down. Look, gold was all the way down here. So when gold in March Madness and this candle here, sometime during the month, it was at 1450. People were probably looking all the way down here. Probably it was below maybe some rising trend lines.
Yeah.
People were saying it's the end of the world. But if you look at even here, like there's this great tool, guys, here. If you put the replay tool, you could erase, like, let's say I put myself back in, look, I'm in March Madness during the month. I'll even do you one better. I'm gonna take here. So now I'm gonna play my replay tool. Here it's going. Okay, here's the consolidation. It's gonna March Madness. No, it's still going up. It's going up. It's going up. It's playing out. Oh, you think you're there you go. That was March Madness. Ah, I missed it. That's crazy. It went all the way
Okay.
down here, and
Yeah.
that was intra-month. You're even on the daily chart, the weekly chart, you probably had some closes below a rising trend line.
Right. Right.
So you gotta, my best advice is at least monthly candle charts, stay clear of the noise and wait for those capitulation moments where, especially above, if we close back above the wall, previous support and resistance, you see it right here, refused to close a month after, like, there's another example. There's so many. This month here in January of 2020, it closed above a wall convincingly. So it's like not convincingly, just a small wick. And this wall is what, so that's the equivalent for silver's $28, $29 previous support, important support, right? Once you broke below, that became important resistance. Gold here gave you another signal that that wall was dead. It became support. And that's what helped it during March Madness. Even if it seeped through on the smaller time frames, by the end of the month, gold knew there was a higher probability that this was a floor, that 1560. So yeah, man, maybe 1560 is the low watermark there for a long time.
Okay. All right. You have just a quick look at silver. I know some people are talking, wow, real low numbers, but
Well,
I also know people thinking 1760.
It's like silver. What it's been
It's
telling
right
you,
there.
because it refused to do a new high, it's been telling you that this was possible here. Okay, this is the chart. Look, I have a all nice chart all queued up.
Yeah.
These are the recessions, the US recessions overlaid to the silver price. I have the 8-year moving average. Even here, you see the recession, silver refusing to do a new high. And I know recessions often, they declare them in hindsight, right? And they adapt numbers. You know, sometimes they think it's positive GDP, and years later, or they say, oh, finally, we were already in a recession. Australian dollar not able to do a new high versus the US dollar was a clue. Silver here not being able to do a new high here was a clue that we were heading.
You think Aussie's near a low now?
Well,
and before you leave this chart, I know you have to go, where's that 8-year moving average coming in?
Yes,
now?
1840, Dale. Nice observation. So look, here it did a perfect bounce in the GFC here. So what could happen is we could have a wick below this and close above that critical 8-year moving average. And it's pretty solid because you see it served as a beautiful pivot line here. And you know, some like there's an 8-year cycles in gold and silver. So you try to match the MA to the cycle length. You see here, perfect test. You see here how it reacted on both sides. Here, breakout. Look, this is meaningful again. I don't think silver broke out in July of 2020 for no reason. I don't think gold broke out in June of 2019 for no reason. And this is support.
A retest.
Yeah, it's a retest. So you gotta, sure, intraday we could have a flush down, but as soon as you get that
darkness of the abyss.
Yeah, is that what I wrote?
Is where you look for silver and give it a kiss.
And and silver will tell you when the recession, the bulk of the recession is done, because halfway through, that's when the recovery, I call silver a recovery metal. Once it realizes that the recession is almost over because of whatever the Fed's going to do, loosening or whatnot, I'll start pricing in the recovery way ahead of US equities, and it's just gonna explode upwards there.
Okay. Well, gosh, thanks, Patrick. I know you brought up, we're already talking again. It's so amazing how 3-4 months fly by. And, you know, look, you're one of the hardest working technicians I know, you and Kevin. And people that want to follow you, best place is at Bad Charts 1 You want to show your website
Yeah.
before I go?
So guys, yeah, we have been Kevin there, and we have like a yearly 60% off yearly subscription. So use discount code PREPARE. And this is the website. We have, there's a whole bunch of stuff I don't post on Twitter. Twitter is like the macro stuff, but there's like this one I posted for about, even when oil was going back up, I had, this was like last week. And now where's oil today? It's back on this support line, I think, right, Dale? 95 today?
Yeah, it's taking it out, testing
And
it,
look,
yeah.
it was simply a back test of this topping pattern. And yeah, I
And
could have went back
measure
up.
68, measure 68 you have down there.
Well, I
On a
did that one,
breakdown.
but I updated for the, that was the worst case, but I did another chart for our members. And I think here there's a wall at 85. So when that's
Okay.
why guys don't look too close to the steering wheel, because there's support and resistance further back and it could
Yeah.
stop at 85.
Yeah, look left, guys.
Look left. Right. That's a good say. I should say that. It's
Yeah,
true.
look left,
guys.
man. That's a market's memory.
And
And
so
I'll remember this interview for at least, you know, with my memory, at least a few weeks. So, Patrick, I love you, bro. Thank you so much. You know, we've been doing this long enough that you're not just a guest, you're a friend. So say hi to Kevin for me, and good luck, good hunting the rest of the summer. And we'll be talking again in the fall, my friend.
thanks, Dale. And yeah, we'll try to get you back on our show there. It'd be fun to ask you a few questions, to be on the other
Okay.
side of the mic. That'd be cool.
You know me, I have ADD. You know what that is, right? Attention deficit disorder.
For
That's
real?
because I can never get enough attention. Anyway, so that's my definition of it. Anyway, thank you so much, bro.
All right, man. Take care,
Good
guys.
luck, and I appreciate your time and your hard work and your imaginative technical work. Okay.
All right, Dale.
All right, so that's a wrap, everyone. You could join the team in 20 minutes on the morning edge. Remember, don't just count your pips, count your blessings. We'll see everyone tomorrow to wrap it up. I'm going to have Peter Goodburn with us tomorrow. Adios. Thanks again, Patrick. You're very welcome, Mary.